This is the third part of Principles of Finance. We're going to talk about agency theory. So, if you are an entrepreneur and you start your business from scratch, well, you obviously, or we would like to think that you have an incentive to do as best as you can, right? Now, if your business grows and you need to hire someone that could take care of whatever you do, uh, you might run into a problem, right? This professional manager has the incentive to maximize their personal wealth, whereas you, as the original stockholder, and all of your stockholders want to maximize their wealth. So there's a little mismatch right there, right? That is called agency problem, right? That's an agency problem since the agent, that is the CEO, their interests are not aligned with the fact that you want to maximize stockholders' wealth. Now, how can we mitigate or how can we eliminate this problem? Well, three different ways, right? If it's trivial in a way, we can ignore it. There are some instances in which it will be more costly to do something than to do nothing at all. So we can just disregard it. If it is serious, we can have eyes on them all the time, right? Um, I mean that works. Um, I don't know whether that's the best way, but there is another way to deal with this, and that is to provide incentives, right? Um, One of them, the employee stock options. That's a very famous one. If you have the right to buy the business stock in the future at today's price, right? Let's say Apple. If the price of Apple today is $100 and you are the manager and you have executive stock options, well, you have the incentive to increase the stock price as much as you can in 5 years so that once you have your options, you can buy at $100 and sell or keep at a value that is way beyond $100 in two, three, $400, right? So that's extra money that you're making and extra money that the stockholders are also making. Now, we talk about corporate governance. That's basically the legal framework of the corporation, right? All of the laws, policies, everything that deals with the corporation, right? So the one that oversees the corporation is the board of directors, right? I don't know if you ever heard the term chairman or chairwoman or chairperson of the board. Well, that's the person that oversees the corporation, right? They hire and fire CEOs. They evaluate the management. They decide how to pay, how to compensate the managers, right? There are other monitors, auditors, right? People, outsiders that go and see whether your financial statements are accurate. That's extremely important. That gives credibility and legitimacy to your numbers, right? Stock analyst. If an analyst gives an opinion and thinks that your corporation is going south, well, you want to know why, right? Banks, sometimes even people from the bank sit at the boards of important corporations, right? Banks need to be your partners, right? So you want them to know that you're doing okay so that you can have access to their services, right? Rated agencies, same story. If you issue bonds, they're gonna determine the riskiness of your bond. That's important. Oops, I moved. So credit rated agencies. That's pretty much how this works. The insider is the board. Outsider, we just talked about them. Stockholders have an input here. Managers have an input here. And don't forget the Security Exchange Commissions and Internal Revenue Service, right? Uh, Security and Exchange Commission sees whether you are following the law with respect of reporting. IRS with respect to taxes. Right? And ethics. This is very important, right? I mean, and this is not trivial for finance since we're working with money. This makes us more vulnerable, right? Why? Because we're using other people's money, right? Managers, bankers, investment advisors. Yeah, it's we are dealing with someone else's money. Therefore, our conduct needs to be impeccable. Our conduct needs to be impeccable. Otherwise, if you lose your reputation, you lose your career. If you lose your reputation, you're not going to be able to do anything related to finance in the future because you're not trustworthy. And the fact is, capitalism and finance and financial management, everything is related to trust. And if people are not able to trust you, you don't have a career, and that's it, right? So that's basically it. So uh, now, finally, don't forget about financial markets and financial intermediaries. It's we need to make the money go from one part to the other part, right? Therefore, this intermediaries are going to help us do that, right? If we didn't have banks, it would be really hard to get loans, right? Because a lot of people are saving small amounts, and as many save small amounts, we can create a large amount that we can use to buy a house, right? So